Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are looking at the top 5 best stocks to buy right now. And it doesn't really matter where the current stock market is right now because these companies are going to be great either during a recession, a stock market crash, or even during a bull market. So literally these are the top companies to buy at literally any time during the overall market cycle. And here in our first article that we are going to analyze, we have the top 3 stocks to invest in right now. So why and how did we pick these stocks? Well, we're actually following a hedge fund or smart money called Renaissance Technology, which is led by Jim Simmons. And he uses a mathematical and statistical method to make money in the stock market. To give you some context, between the years of 1988 and 2018, Renaissance Technologies as a hedge fund has generated an annual return on average of 66%. If we compare that to the S&P 500, which is a fantastic stock market benchmark, that only returns around 8 to 10% year over year. So literally they are increasing their value by over 6 times what the overall market is doing. So clearly this mathematical and statistical method is working to some degree. At the end of June, Renaissance, according to their 13F filing, had around $84.5 billion invested in around 4,173 companies. But in this video, I want to highlight some of the top 3 companies that they have either recently added or that they have over a $500 million investment in, which means they believe that these 3 companies over the next year could have phenomenal gains for their overall customers. I'd also want to point out that on average, they have around $20.2 million per stock. So if we can identify their high earning stocks and the stocks that they have a lot of capital in, these are the stocks that we want to look at today. The hedge fund's largest holding right now is a Danish drug company named Novo Nordisk, ticker symbol NVO. And right now, this hedge fund has around almost $2 billion allocated for this particular company. But in this video, we're going to identify the top 3 stocks that Renaissance Technologies is buying right now so we can copy Simmons' portfolio to a certain degree. Now, I will also add my personal opinions on all 3 of these stocks, but currently these are the companies that smart money is buying. And we are going to start off with Microsoft, ticker symbol MSFT. The current stock price for Microsoft is $293 per share, while stock professionals think that the company is worth anywhere between $250 to $411 over the next 12 months. The author of this article believes that Microsoft is one of the best stocks that an investor can own for the next 10 to 20 years, and I completely agree with him. I personally own a lot of Microsoft shares, and it has paid off very well for me. Now, in terms of Renaissance, they recently took up a very large position in Microsoft in the second quarter, where they bought around 3.82 million shares. And that would make this company the hedge fund's second largest position, where it's worth around $981.12 million according to their filing. So this means that Microsoft shares are literally fantastic to be owned right now in any economic climate, according to this article. If you didn't know, Microsoft is a gigantic technology company that offers a plethora of digital products and services in regards to computing, analyzing, and building software. The next company we have is Merck, ticker symbol MRK, and they currently trade for around $90 per share, while stock experts think that the company is worth anywhere between $85 to $125 over the next 12 months. Every long-term investor, according to this article, should have some exposure to healthcare stocks, because healthcare stocks are very good defensive stocks to hold, because even times of stock market uncertainty or a recession, people will still need and be buying various healthcare services and or products. Among Renaissance top 20 holdings, 6 of those are healthcare companies, where Merck actually comes in as their 12th largest holding and their 4th largest position in a healthcare company. The hedge fund owns around 7.67 billion shares of Merck as of the end of quarter 2, which puts Merck in a phenomenal position because this means that Renaissance Technologies Technologies has around $694.3 million allocated in this particular company, which represents an increase in their investment into this company by around 12.5%. It's also rumored that Merck is looking to acquire another company, which is going to increase and diversify their cancer drug portfolio. So if Merck can successfully acquire this other company, it's just going to add to the overall revenues and earnings per share that this company is already going to bring in. And I think Renaissance Group thinks that this acquisition is going to go through, which is going to act as a phenomenal catalyst for their overall stock price, causing it to surge. And again, Merck, because it's a healthcare company, remains an excellent defensive play. So even during a stock market crash, Merck should actually hold and retain its value very well. The last company on this list is Hershey, ticker symbol HSY, and Hershey is a giant company that is most known for selling chocolates. Right now, the HSY stock trades for $230 per share, while analysts think that the company is worth anywhere between $210 to $255 over the next 12 months. The main draw to this play is actually their management. Hershey has phenomenal management, which I would call exemplary, and many investors decide to invest into various companies just because the management is extremely strong, and Hershey is one of those companies. Also, according to their Q2 earnings report, their earnings per share rose by 22% year over year to $1.80, so their earnings per share and EPS absolutely demolished Wall Street's expectations for this company because they were only supposed to bring in $1.69. Hershey's overall sales jumped by around 19.3% year over year last quarter, and this is mainly due to 10% of this increase coming in because of higher prices, because inflation has caused them to increase the price of their various products. Also, 5.3% of that growth actually came from acquisitions, and 4.6% of that growth was due to just general higher volume of more people buying their various products. Now, I do want to point out that Hershey and their HSY stock is not a cheap stock right now, but because Renaissance Technologies sees phenomenal growth in this company well into the future, I at least wanted to put this on your watch list for you to do your own research on this company to tell me what you think. Also, according to Morningstar, they actually named Hershey as one of the top 10 best women-run companies. And the author of this article even said back in 2018, and I quote, that the woman running this company was only in the job a little more than a year. It's too early to say how she's doing. But it's safe to say that the December 2017 acquisition of Amplify Snack Brands, makers of Skinny Pop snack foods, for $1.6 billion suggests she's ready to shake things up at the iconic chocolate company. And he said that back in 2018. And since then, the HSY stock has jumped up by around 151% since then in a very short time period. And if we compare that directly to the S&P 500 benchmark, which has only increased by around 55%, clearly Hershey has outperformed the overall market. And those would be some of the top stocks that smart money is buying right now. But however, what about my personal opinions? What are some companies that I want to be buying right now, considering the current stock market environment? Well, you all know that I absolutely love buying Amazon because they are a leader in e-commerce and cloud computing, and I'm extremely bullish and positive on their cloud computing segment. Over the past few years, Amazon has actually been battered by various headwinds due to increasing fuel prices and employees demanding various raises, which means labor costs are also increasing. Many investors have actually felt the heat from these headwinds, and these concerns have somewhat been reflected in the AMZN stock price, which is why some investors actually feel very bearish and negative about this particular company. The stock currently stands at around 23% off their all-time highs, but I think investors are missing the future growth of this company over the long term. They really just don't see the big picture of their overall e-commerce and cloud computing segments, so I quickly want to go over that. Right now, the AMZN share price is trading for around $141, while stock professionals think that the company is worth anywhere between $110 on the low end and $232 on the high end. So why is that? Well, according to Statista, Amazon accounts for nearly 38% of all e-commerce sales in the United States, which is a gigantic market. Clearly, they are the market leader in the United States, and I would argue almost the world in the e-commerce segment. And I also want to point out that according to eMarketer, the e-commerce sales market is anticipated to grow by around 12% per year and reach $1.7 trillion by 2026. And clearly, Amazon is going to be one of the best beneficiaries from this growth in e-commerce. Also, I want to point out how critical Amazon Web Services services are. Their AWS platform is absolutely insane, and that's their cloud computing, which captures currently around 34% of the overall cloud infrastructure services market right now. I think that Amazon's profitability will absolutely explode as they continue to scale their AWS segment. The cloud computing market is absolutely exploding, growing at a 16% CAGR from now until 2030, which means it's going to reach a total market of around $1.6 trillion according to Grandview Research. So this is extremely bullish, and if you don't already have some exposure to Amazon, I would encourage you, because not only is this a phenomenal, stable blue chip company, but the future growth trajectory of this company is extremely promising, and I think that the company is screaming a buying opportunity right now, especially if we can incorporate their price to sales ratio, because historically they have around a 3.8 PS ratio, and now they are trading at around a 3 times sales ratio. So right now the stock is screaming a buying opportunity. And then lastly, our last pick is going to be the New York Times, ticker symbol NYT, which currently trades for $32.54, while stock experts think that the company is worth $25 at minimum and $40 at maximum. If you didn't know, this company is extremely successful, and they are digitalizing their overall business model, which they are doing very successfully. The company also monetizes its print and digital content through its subscription service, which gives them fees and various exposure to advertising, and that's how they make their overall revenue. This in turn translated to very impressive financial results over the past few years, where their revenue climbed by around 15% to $2.2 billion, and on top of that, their earnings rose by around 38% to $1.13 per diluted share, which is absolutely phenomenal. Also, a recent survey actually came out, and it says that 21% of the United States population is willing to pay for digital news, because that's what this company is known for: digital news content and printed news content, which is a huge increase from the survey that they did back in 2016, where only 9% of the US population was willing to pay for digital news or a newsletter that is sent out digitally. According to current projections and forecasts, the New York Times believes it can reach around 15 million subscribers by 2027, which would represent a compounding annual growth rate of 15% on an annualized basis over the next 3.5 years. I also think that this company could be a good buying opportunity, because it's currently trading at just 2.6 times its sales, which is a substantial discount from what it used to trade at, which is their 3.7 times sales on average. So if you want to buy a good growth company for the future, all of these companies on this list could be phenomenal. Now again, make sure to do your own research on these companies, that they align with your own investing strategy and your risk tolerance. I also want to mention that I personally, in my personal portfolio, because I want to be transparent with you, I do not own stock in the New York Times or Hershey, so I want to make sure that you are aware of that. But with that being said, remember to go and smash that like button for more videos just like this one. Subscribe if you are new, comment down below your favorite company to buy right now, and I will see you in the next YT video.